Thank you. So, quick introduction about me. I am a chartered accountant, 21 years of experience, and probably one of the few guys who's not from the design industry in this room, so kindly bear with me. Uh, I've worked in the industry for almost 10 years, working with companies like Johnson Tiles, ILNFS, Pantaloon Retail, and my last stint was as CFO of Payback, which is now part of Bharat Pay. And since last 11 years, I have been consulting mostly SMEs and startups. In 2014, I co-founded Atensio Corporate Services, which is a management consulting and boutique fundraising investment banking services company. And in 2019, I co-founded Mool Innovation Labs, which is probably India's and maybe not only India's, probably the world's first tax planning and optimization tool. So maybe I'll just quickly speak about Mool also. So as I mentioned earlier, that Mool is India's first tax planning and optimization solution. What does that mean? Right now we have come up with this for salaried people. Most of you must be having a chartered accountant to whom you go for your tax planning. And the chartered accountant kind of takes your personal details in terms of what your background is, what your income is, what your investments are, and accordingly structures your tax working, investment workings. Now what Mool does is it takes away that planning bit to a machine level. And what we have done is we have come up with this solution for salaried people because unfortunately in India, salaried people are taxed the most with very little recourse. So essentially what we have done is we have come up with a B2B2C solution wherein the organizations or the employers will take this solution for their employees. And this will give a lot of flexibility in monetary or remuneration structuring for their employees and ensure that the maximum value transfer from employer to employee. In case you guys are interested, you can go to our website, which is mentioned, and know a bit more about us. So moving on, we have a room full of design professionals, and I have a quick question. How many of you have a design on numbers? I'm sure not many, but I would suggest that you guys start taking interest in numbers, and hopefully by the end of this session, you guys would have some interest in numbers. So coming to the agenda for today, we will be covering what is valuation, why do we need to value firms, some of the important drivers of valuation. Then we will also look at prominent methods of valuation. Finally, we come to the important topic in terms of how to value design firms and how to, most importantly, increase the value of design firms. This is something maybe I'll speak a little bit more because I was nudged by Sudhir to kind of speak about this in my session. And we'll wrap it up with some closing thoughts. So before we begin with the agenda for today, I'd like to kind of narrate a story, and this is very, very relevant as far as the topic for today is concerned. Some of you guys must have heard this story. This goes like this, that there is a young girl who has graduated from B school, and she goes to her father, who's very elated on her qualification. And he asks her that, okay, I'd like to kind of test out your business skills. And why don't you take my old car, which is there in the garage, and take it to the downtown motor dump where they kind of dump old cars and see what value you get. And just come back. So she goes and comes back after a couple of hours and says that, Dad, these guys were saying that this is a really old model and we cannot pay you more than $1,000. Okay, he says, why don't you take it to the nearby pawn shop and see how much that guy is offering? Surely she goes and comes back and says that now that fellow is saying this is really, really old model. I cannot give you more than $500 for this. Okay, now one last try, he says. Take it to the vintage car dealer in the town and see what value he is offering. After some time, the daughter comes back really elated and says that the fellow says that this is a rare Nissan Skyline R34 model, very few models left, and he is happy to pay $10,000 for this. So essentially, the moral of the story is that in case either you or your business isn't valued, maybe you are in the wrong set of circumstances or wrong set of people you are dealing with. So find your right value, and that's very important. Now, we'll straight away jump into the topic, and it might be a little heavy on jargon, so I have tried to make it simple for you guys. So what is valuation? As the definition goes, it's a process of deriving the fair value of a asset or a liability. Now, I have further kind of broken down the jargons, and I'll not go through it in the interest of time, but in case it's something confusing, we can always connect off stage. Coming to why the need for valuation. So there are some important stats here. Design industry in India is growing at a CAGR of 25%. And there's a huge demand for design professionals across India in various categories. So, I mean, prominent among them is domains like UI, UX, animation, fashion, interiors. I mean, you guys are knowing it better since you are the pros here. Hence, it's very, very important that business owners, you need to know how to increase the value of your business and how much value you are creating or unlocking. Further, there could be multiple use cases where you need to value firms, and these could be for any kind of transaction. So unfortunately, in India, we have mostly boutique or not very large design firms, but if we are going from a developing to a developed economy, I'm sure we will see large design companies. As of now, I can maybe talk about Tata Elxsi as like the example, but maybe few years down the line, we will have many such large companies which are kind of design-led, and hence there could be mergers, buyout, transactions like that in the future. Management may want to know the value of the firm, and this could be for internal purposes also. This could be for fundraising. I mean, given the fact that we have a lot of R&D innovation coming into the industry, there could be a drive for investments, there could be a rush for talent, and hence there could be requirement for heavy amounts of funds in the near future. This is a not so pleasant thing, litigation, but that's also the sad part, that in case there's some dispute amongst the founders, partners, and they want to separate or kind of ensure that there is an amicable settlement, there could be a requirement for valuation. And for accounting purposes also, there are certain disclosures which are required, and for that also there could be valuation required. And finally, for insurance purposes, if you have kind of insured some aspect of your tangible or intangible assets, that could be required to kind of valued. Now, as design firms, I would say most of your values is in intangibles, and that would mean that the importance of intangibles could not be underestimated. So these are the three kind of factors which drive value as far as intangibles are concerned. First is revenue enhancement, which could be through trademarks, brands, cost savings, which could be driven through know-how, and entry barriers, which could be based on your position in the market or your ability to kind of drive certain forces in the market. That leads to a competitive advantage. Further moving on, what drives value? So for service firms, I would classify that these are the major drivers of value. First is a resource mode. What do we mean by resources? Resources are the kind of tools and other facilities which are there at the disposal of the agency. And this could be meaning the IP, which could be meaning the brand, which could be meaning the trademark, which could be meaning any of the intellectual property which the design firm has developed. It could be a knowledge mode which could be based on either internal know-how or the resources which the agency has. The regulatory mode, unfortunately, is not applicable to your industry, but what I can give an example of a regulatory mode which has been leveraged very nicely in India is Reliance Jio. They use the regulatory framework to kind of gain an upper hand in the market. I'm sorry. As far as the tech moat is, this is the technology know-how. Again, depends on what kind of skills or technology you are leveraging within your industry to drive the value of your firms. Finally, the consumer, customer, and partner contracts. This would mean basically the kind of long-term contracts or clauses on non-competes and other stuff which you have with your customers and partners. So all these things together drive value. Quickly, these are the global top brands. I mean, it's a very self-explanatory thing, but what you would see is 7 out of these 10 brands are from the USA, and 2 from China and 1 from South Korea. But another thing is, except for Walmart, most of them are from a tech or telecom background. In the Indian top 10, unfortunately, in the global top 25 also, we don't have an Indian brand, but this is the Indian top 10 brands. And another thing which is very, very noticeable from the brand finance study which I referred to was that India's brand value during the COVID has increased by 42%. In terms of approaches to valuation, these are the 3 broad approaches. One is a cost-based, other is a market-based, and third is a cash flow. We will quickly understand what are the methods under this. So cost-based takes into factor the historical cost to build your brand and the replacement cost, basically, in case you want to replace your brand. The market-based approach basically look at your company and look at any comparable transactions, or in the residual method, basically they carve out the value of the brand. In an income-based, that is predominantly referred for design industry. It's a relief from royalty wherein we calculate in case you don't own the brand and if you have to pay out royalty, what would be the value of that royalty, which is kind of discounted and capitalized. In excess earnings, we take into factor basically the earnings which are accountable to a brand which you have created and how much excess upside it is giving to you. And similarly, in a with or without, what you essentially do is internally, instead of calculating, you map your company to an external company and calculate the value of the brand. This is a very quick example of relief from royalty. I'll not go into the details, but just for information purposes. Now, this is a slide I'd like to speak a little more. So, any intangible-driven company, including design companies, the value is mostly in intangible. The book value is very, very limited. And what is important is how do you unlock this value? To unlock this value, I mean, one thing which Sudhir raised to me just before the conference was that he has created so many brands, but those brands have become huge vis-a-vis his design firm has not grown so much. So my quick thoughts around this is, now the environment has changed, maybe what it was 20, 30 years ago. You guys should consider working with good startups which are funded, and also try to have some skin in the game. What do I mean by that? Try to take an equity at your firm level, and that would ensure that when the valuation of the company grows in which you have created some brand, some design, which you have created some products, then your firm value also grows significantly. Happy to discuss this more offline. Quickly, how to value a design firms. We need to use, again, as I mentioned earlier, income-based approach, and one of these 3 approaches to ensure that the value of the intangibles is clearly calculated. Now, concluding thoughts, on the right-hand side, we have a movement of S&P tangible and intangible breakup, and you will be surprised to note that from a mere 17% to almost 90% in 2022, and that's just a period of almost 45 years, we have seen this move. So currently, these intangibles make 90% of the S&P 500 companies. The future of business is asset-light and tech-driven, as we can see in various business models. It's not only design companies. And design firms have a pivotal role to play in the India's march to a third largest economy by 2030. So guys, let's ideate, collaborate, and grow. Thank you.